Hello, friends. Today I am giving you a update on Mastercard Incorporated, ticker symbol MA. We'll be looking at the earnings report, the last performance since I last talked to you about this company, and I will be also giving you an updated price. Welcome to Money Talks with Martin Reyes, where we learn to care about our money and find great companies at great prices. Mastercard, in the last 5 days, it has been growing by almost 2%. Last month is up almost 10%. Last year is up 28.6%. Year to date, 10.3%. And the last 5 years has gone up at 115%. That is amazing. Right now it's trading at $468, and the target price of the analyst is at $470, which will be close to 0.3, 0.4% up. So what they're saying is that Mastercard right now, based on the revisions and the stuff that the average, what they're thinking about is fair value, or it had arrived where it needs to be. So just a disclaimer, I own Mastercard. I bought it in around this deep. He pays a dividend of $2.64, which is a dividend of 0.56%. It is trading right now at 39.5 times earnings, almost 40, and a forward PE of 31.8. They reported earnings on January 31st, in which they beat on normalized EPS by 10 cents, but they miss on GAAP EPS by 11%. Not percent, cents. So EPS normalized, they beat by 11 cents, and EPS GAAP, they miss by 11 cents. Revenue came at $6.55 billion, beating the estimates by $63 million. They're scheduled to report again somewhere around April 26, and the analysts are expecting EPS to grow at $3.23. Same thing with the GAAP, and they are expecting actually a smaller revenue estimate. When it comes to EPS revisions in the last 90 days, it's up 20. They have been up revisions of 27 ups in the last 90 days and 4 downwards. As you can see, their EPS quarterly has been growing pretty steady, and they're giving good numbers, really. So if you have any comments about Mastercard, if you like the analysis, if you have any questions as I jump into looking at the last 10 years of their numbers, and there's something that you want to point out, something that I miss, a question that you have, just please let me know down in the comments below. Also, if you like it, just let me know that you like it by hitting the like button or subscribe so that you don't miss any of my new videos. Mastercard has been growing their revenue per share in the last 5 years by almost 10%, and in the last 10 years by almost by 12.6%. For some of you new investors, just want to point out one of the things that that's why I like to put graphics. I like to see these numbers to trend in a linear up instead of being cyclical or ups and downs. So I like that about the revenue. Their gross margins is 100%. I didn't believe it. So I went back and I checked, and they just don't report any cost of goods on their sales. So but they do subtract it in other areas. So um, this is a little bit misleading. So when it comes to earnings, earnings per share are growing. It was a little flat somewhere between 2014 2017, but since then it has been picking up. Once again, this is why I like looking at the graphics. It helps me. I'm a visual guy. That's why you see all the different colors. When it comes to how much they've been growing their earnings per share, which includes the buybacks, they have been growing it at 8.3% in the last 5 years, and in the last 10 years, 14%, a little bit more than that. Profit margins are at 44.6%. This is pretty good. This is way above my 25% average that I'm looking at. When it comes to free cash flow also, you can see that it has a really nice ascending line. For those that are listening in the podcast, it's just going straight up, not parabolic, but nicely growing. In the last 5 years, it's been growing at 9.5%, and in the last 10 years, almost 16%. Free cash flow margins, once again, it's at 44.1%, which is above my 25% that Terry Smith recommends for quality investors. So I like that. When it comes to the 5-year average of free cash flow yield, it sits at 2.47%, which I believe is a little smaller than Visa. So this means that for the average in the last 5 years, Mastercard has been returning about 2.5% in free cash flow of the cost of the stock. When it comes to book value, just like Visa, it hasn't been growing much. It's a little flat. It's grown in the last 5 years at 4.8%, and in the last 10 years at 2.3%. Return on equity is huge at 153%. Return on invested capital, which is the more reasonable number, the number that reflects more how they're doing, because that includes debt. It's they are returning a 50%, almost 51%, which is a great number. Is almost it's double of what Terry Smith recommends and what I've been starting to look for. Return on asset is at 26%, which is pretty good. Very, very good. Dividend share for you per share, dividend investors. As you can see, it has been growing. There has been some big jumps on the dividends. I'm guessing this was a special dividend. It's been growing in the last 10 years at almost 18%, and in the last 5 years at 12%. So that's pretty nice. The payout ratio, it's at 16%, which means that they can cover the dividend. Nothing to worry about here. Long-term debt, it's been growing in the last 10 years, almost 28%, and in the last 5 years, almost 13%, but nothing to worry about because they can pay all their long-term debt with within a year and a half, a little bit more than half, with their free cash flow per year. So that is there's nothing to worry when it comes to debt, at least for me. When it comes to outstanding shares, they have been buying back. They were buying a little more aggressively earlier in the decade, in the last 10 years. At the CAGR average of the last 10 years is above 2%. In the last 5 years is they have been buying 1.53% CAGR. So that's really good numbers. When it comes to the summary analysis page, you can see all the numbers that I've been talking about here. If you see any gold, yellowish numbers, that means that are way above average. They're amazing. If you see anything that is green, that is above average. When you see anything that is blue, that's good, that's average. Anything that is orange, that is below average. And if there's nothing red here, that will be a red flag. The free cash flow yield for Mastercard in the last 5 years, the average is almost 3%. And right now it's sitting at 2.47%. I mean, no, it's not right now. Sorry. The 5-year average is at 2.57%, which means that Mastercard has been gradually becoming a little bit more overvalue based on the free cash flow yield. So if we want to find out how much the free cash flow yield is right now, we take the latest free cash flow yield, which will be $11.54 per share. We divide it by the price of the share, which is $468.13. That's the one that I'm going to be using. And it gives me a free cash flow yield right now at 2.46%. So that it's in line with the 5-year average. So you could argue based on that it is fairly value. We're going to be jumping into some of the valuations that I have, and I just want to remind you that I'm just a YouTuber. Please don't make any financial decisions based on my my assumptions. This is just for educational and entertainment purposes. If you going to make any financial decisions, please consult your financial advisor and do your own research. So let's jump back in. When we look at the historical multiple valuation, we're looking at a fair value somewhere between $365 if we use the average to the trailing 12 months to $430. For Mastercard, I would be looking more at the trailing 12 months, and that's where I'm going to be focusing more. If we use the revenue-based valuation that I got from the Patient Investor YouTuber, we take the trailing 12 months revenue, grow them at 10% for 5 years. Then after that, we take that revenue and we assume that they will continue to have the same profit margin that they have averaged in the last 5 years. That gives us a net income in 2028. We assume that they're going to continue to be buying back at about 1.53%. And whenever we divide those two numbers, it gives us a future EPS of $20.62. Assuming that we can sell Mastercard in 5 years by a PE of 40, that will give us a future price or returns of $824.61. We add all the dividends that we will be receiving and growing until then. It gives us a total return of $882.50. Since I want a 15% return on my investment, we divide that by 2, and it gives us today's fair value of $421.25. When it comes at discounted earning valuation, it gives us a fair value of somewhere between $338 to $421. payback time, we grow the free cash flows, and we receive them for the next 8 years. It gives us a fair value of somewhere between $288 to $356. Discounted free cash flow valuation, it gives us a value somewhere between $400 and $491. And when we look at owner's earnings valuation, it gives us a number between 241 to 287, which we will not be using. We will not be using the owner's earnings. We will be actually focusing more on the trailing 12 months. And whenever we put all the numbers together, it gives us a fair value of $424. Right now it's sitting at $468, and based on my numbers, that will indicate that it is overvalued. Now, I do want to remind you before you start, blasting me with, whoa, that's a low number. Remember, all of these numbers, all of these evaluations are based on a desired return of 15%. I want 15% in return. So those are my assumptions behind that. If I am not 100% with Mastercard, I will feel okay having a $15 margin of safety. That will give me an entry point of $360, which is about where I bought it not too long ago. So those are my thoughts. If you would like to get this sheet, you can buy it at Buy Me a Coffee. If you have any questions or comments, please leave them below. And I hope to see you in the next video.